Hi, I'm Mash Ponigala. So in one of my previous videos, I was talking about trading, investing, day trading, and risk management. And one of the points that I said was that day trading or any kind of trading is not for someone who cannot control their emotions. And so, in today's topic, I wanted to take an example of one of the greatest geniuses of our history, Sir Isaac Newton, and how even such a genius, could not sort of control his emotions, and how he lost a ton of money back in the 1720s. The reason I wanted to make this video was last couple of weeks, there's a big kind of a black swan event going on in the history of investing, right? In the history of the stock market. I haven't seen it in my lifetime, and you probably haven't seen it too. It's GameStop. It's how a group of retail investors or traders, if you want to call them that, got together on a Reddit group and decided to take on Wall Street, right? They decided to take on the hedge fund guys. By proxy, they're taking on Wall Street, right? And what happened? Anyway, we'll discuss that at the end of the video. But let's get into the story of how the greatest genius of our times, not of our time, but the greatest genius, fell for emotions. Or was it greed? Let's take a look. Okay, so Sir Isaac Newton invented calculus and discovered physical laws that govern the universe to a certain extent, right? So gravity, Newton laws of physics, of course, he invented calculus to explain how the universe works, and so on and so forth. So clearly, one of our humanity's geniuses, so to speak. The genius scientists used to invest in the stock market back in 1700s, right? And had a diverse portfolio. So initially, Newton had a diverse portfolio and he was doing quite well. In the spring of 1720, Newton owned shares in a company called the South Sea Company, right? And it was the hottest stock in England at that time. So 1720, this is 2021. What's that? That's 300 years ago. Stocks probably behaved in a similar way as they do today. And traders and investors probably behaved, or rather, indeed, behaved the same as they do today. Now, what happened was that sensing the market was getting out of hand, the South Sea Company market, Newton dumped his shares and pocketed 100% profit totaling £7,000. Back in the day, £7,000 was a lot of money. But months later, swept up in the wild enthusiasm of the market, Newton jumped back in to the same stock at a much higher price. Because the South Sea Company stock kept on going up. It was a hugely bullish market and it kept on going. People were buying in. The buying pressure lifted the price. It sort of shot through the roof. So Newton decided, hang on, I got out too early, right? So I only made like £7,000. It's 100% profit, but this is where human emotion comes in, or more likely greed comes in. And so he got back in at the top price, and then the stock crashed. And Newton, Sir Isaac Newton, lost £20,000 in 1720. £20,000 is equal to roughly $4 million in today's money, right? So Sir Isaac Newton lost $4 million in the stock market. And he was rumored to have said that he could understand how the heavens moved but he could not understand the madness of a group or something like that. It's paraphrased. I don't know if he said that exactly, but it's been quoted. He's been quoted as saying that. So was it greed? Was it emotions? What's going on there? If the greatest genius could not, predicting the market, I don't blame Sir Isaac for not predicting the market, because markets, as I said in my previous video, are random, right? And of course, you can find an edge, which he did. So initially, he found an edge, and therefore, he did profit from that stock. But then what happened? Discipline. And this was one of the points that I said, that you cannot be a day trader or even an investor, without discipline. So what happened was Sir Isaac Newton let go of discipline. He gave in to greed. He gave in to emotion. He saw this stock rising higher and higher and higher, and FOMO kicked in, fear of missing out. And he thought, I should jump back in and reap more profits. And what happened was that his life savings were wiped out. So come to think of it, if Sir Isaac Newton could not handle his emotions and greed and lost his life savings, what chance do we stand, right? So that's why I say that the most important, the most fundamental thing for trading, day trading, investing, swing trading, whatever, is to have discipline in terms of controlling your emotions and letting go of fear and greed. Greed, you let go through satisfaction, right? So when you have a trading plan, and if your trading plan says, for example, 3:1, right? So reward to risk ratio. If you're risking $100, you hope to make $300, or you want to make $300, so that's what your trading plan is. Of course, you could have a trading plan that says, I will risk $100, I want to make it $3,000. Well, good luck with that. But reasonable kind of risk to reward ratios, once you have that, even if you see the stock jumping, right, going up, don't go back in. Especially, the most fundamental thing is you never buy when the stock price is rising, and you don't sell when the stock price is falling. You buy when the stock price is falling. Rather, once you're sure that, okay, there's this possibility that it will kick back up, and you sell when the stock price is rising. You need to let go of greed, have satisfaction, and fear. You should not have fear. I know it's easier said than done. I understand that, but it's like a muscle, right? You go to the gym, you develop your muscles just like that. You need to trade, paper trade, simulations, and even with money, a little bit, whatever you can afford, not the money that you cannot afford to put into the market. You face these situations where you face greed, you face fear. Now, what about GameStop, right? Is it a good time to buy now? This week, I think it could be squeezed more. Now, by the way, I'm not a professional financial advisor. I'm just discussing it from the perspective of trading principles. People might be thinking, should we get back in now, or should we get in now? Because, it went from, I don't know, what was it, $12 to more than $400. And right now it's sitting at about $312 today. So can we get, should we buy in and make money? Of course, it's up to you, but this is a bubble about to burst. And so if it were, I would not buy now, because it is still, it is at the top. I mean, it's been squeezed and it's been inflated almost artificially, so to speak. So in any case, the point of the video is not about GameStop, but it's about greed and how to control your emotions, how to let go, how to have satisfaction so you let go of greed, and how to let go of fear, by showing off up your courage and having a trading plan and so on and so forth. Okay, I hope you found this story interesting. If you did, throw me a like, subscribe to the channel if you have not, and we'll talk more about trading, discipline of trading, technical analysis, fundamentals, and all that in future videos. All right, till the next video, Take care and good trading.